Tell you, boy. Tell you, boy. Ooh. So sorry. I'm late. Man. These Windows 11 emojis look so crazy. And I got my mic unmuted.
And all we can see is the
I know.
Oh, okay.
Yeah, I know. Remember the what's the name is get out of the way. The what's the name is the Zoom is different. The Zoom gonna be seeing, like, remember I said I got to share the screen in the Zoom, so the Zoom, y'all, the YouTube gonna look different from the Zoom as far as like when I'm sharing the screen and stuff like that. But anyway, good evening everybody. Man, tell a friend to tap on in, because we here, man. We here. It took me a minute to get here. Technical difficulties over and over. I'm not sure why, but it is what it is. Why am I not seeing? All right. Okay. All right. Oh, I didn't do this. Yeah, man. Technical difficulties, man. And then Marco went to talking to me and made me talk for like ever. You know what I'm saying? So it's partly Marco's fault. Hey, let me do this real quick and then we're gonna get to it, all right? All right. Got it? Pin this comment and we're gonna get to it. Tell a friend we here, man. We like 30 minutes late. I promise you. Something don't want me to do this Facilitation February. Because ever since I've been doing this Facilitation February, something been happening. Even before I started doing it. If y'all remember, before I started doing it, it took forever to get like my PC in. It took forever. Like I had to do like a full reconstruction on the room, because when I was taking everything down, it was, oh my goodness. So, and then now, my system always gives me issues. I'm sorry, y'all. I'm venting right now. Because I'm in that mood to make sure I'm in focus. Because I be flipping my screen down because it be in my way. So I got to make sure I'm in focus. So if you're on Instagram, come over to youtube.com/thenewTLR so you can see the screen and participate with Facilitation February. You hear me? All right. Good evening, everybody. If this is first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not first time tuning in to Tim's Tidbits, I still want to say welcome. but give you a nice hearty, well, thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr. Not only am I the world coolest dad, it's your boy Harania Grande. That just be a big smile if you don't hablo español. And you're in tune to another episode of Facilitation February. What we are doing during the month of February, every night at 8 p.m. Eastern Standard Time-ish, supposed to be 8 p.m. Eastern Standard Time, every night, Monday through Friday, we're going back through my The Art of Reading Price Action playlist, and we're watching each educational video. During the video, if I see a need to do a deeper dive into one of the concepts, because the whole playlist is detailing my understanding of the ICT concepts. If I see a need to do a deeper dive into the concepts, something that I've gained a better knowledge of, something that Michael has given more information on, then I'll do a deeper dive. And it's just a way to help the gang solidify the concepts, or for those who still haven't grasped certain aspects of the concepts, hopefully help them see it in a different light or understand it a little bit better. And at the end, I'll open up the floor for the gang, those that's viewing via Zoom, right? They'll have the opportunity to ask questions if they have more questions, right? I'm not monitoring the chat on YouTube. I'm not monitoring the chat on Zoom, right? So if you have a question, the questions are coming from Zoom. Feel free to talk amongst yourselves in the chat, but I'm not monitoring the chat because I don't want to get distracted. Y'all know how I do. Y'all know how I do. Okay. So with that being said, let's see who we got up in here. Who we got up in here today? Where's my Zoom? I see we got Marco up in here. We got Jim up in here. We got Yolanda up here. I see we got Shani up here. Shout out Valentine. We got G Ferg up here. We got light skinned Deborah. Anytime I see light skinned Deborah, I know my dog Sherwin is around. So shout out Sherwin. You know what I'm saying? When I see light skinned Deborah, I know Sherwin up in here. We got Lump up in here. I see Seawalk up in here. Why is my thing looking different? I did something inside Zoom to make it look different, and I do not like this. I'm so sorry, y'all, but I do not like this. Like, it's got me like at the top. Man, my face all dry. It's got me at the top and everybody up under me, and then when people talk, they be right next to me, and I don't know, I done did something. I did something different. A little bit better, but it's still dry. All right, it's still dry. Yeah, let's get to it, man. Tonight on Facilitation February, we are, let me share this for y'all inside the Zoom. Share that. And then for everybody else, all right. I don't want desktop only. I want me on there. All right. Got me on there. Okay. So tonight we are looking at how to study price. Right. I don't know what this is about. I don't know if it's just a back testing thing, but it's about how to study price. Everybody hearing me okay? Y'all can hear me all right? Everything, the sound and all of that is good?
Sounds good.
All right. Let's get to it, man. Before we get started, man, y'all give yourself a round of applause. You know what I'm saying? Give yourself a nice round of applause for, you know what I'm saying, taking the time to better yourself when it comes to reading this price action. Let's get to it.
Greetings, salutations, to the Evita Defus. However you say it in your neck of the woods, I'd like to welcome you to another episode of The Art of Reading Price Action. Again, I'd like to welcome you to another episode of The Art of Reading Price Action.
this thing is
And
blowing
in
my
this
ears
episode
away.
of The Art of Reading Price Action, we will be talking about how to study price action. And not only talking about how to study price action, we're going to be talking about how to study price action using the ICT concepts. Now, this is a special episode, a special insert, Fraggle, if you will, for those who don't know what a Fraggle is. Insert Fraggle, adjust the op order in the military. Anyway, a Fraggle, if you will. This wasn't a planned part of the series, but I felt like this is something that's needed because the mentees had been talking to me. And so I said, you know what? I'm going to do a video based on how to study price action using the ICT concepts. Because when people tell you to do, hey, just go back test. Just go study it. They never tell you how. So you're just fumbling in the dark. And that's my job as a mentor, to help you not fumble in the dark. Now, speaking of mentee, if you desire to be a part of the paid mentorship, there is a join button here, some membership. You will be in the Discord. Another episode of The Art of Reading Price Action. How to study price using the ICT concepts. Right? Yep. That's the same picture from the last time. I just didn't change it. I changed the title. Sue me. But how to study price action using the ICT concepts. Now, you want to study price starting from the top down. TDA stands for top-down analysis. You always want to start studying. You don't want to start studying price from the lower time frames. The top-down analysis approach is the best way to study price. I don't care what trading strategy you use, but you want to start on a higher time frame and work your way down. These are the time frames in which I study price. The monthly, the weekly, the daily, the 4 hour, the 1 hour, the 15 minute, the 5 minute, and the 1 minute. Those are the price jumps, if you will, the time frame jumps that I use. Now, and everybody knows I like watching it on these time frames, but I like trading with the 2 time frame difference technique. I call it the 2 time frames down. So if my higher time frame that I'm looking at is a weekly, I like to make my trading entries on a 4 hour. If my higher time frame that I'm watching is a hour, I make my trading decisions on a 5 minute. If it's a 15 minute time frame I'm watching, I make my trading decisions on the 1 minute. So the 2 time frame down technique is how I like to trade and watch how price plays out. But I look at all the time frames to see what PD arrays are present, so I know if it's a 4 hour PD array, then I'm looking at what the 15 minute is doing in reference to that 4 hour PD array. Now,
Let's pause it there. Don't want to gloss over this, right? Now, the reason why I like to use that technique is because when you look at price 2 time frames apart, the market maker models and the price delivery seems to just come together beautifully. I don't know why. That's just what I've noticed, right? I didn't invent looking at 2 time frames apart. I heard somebody say it a long time ago. I think I heard Casper talking about it, and he was talking about the weekly and the 4 hour and the 15 minute. And so I started going back, looking through 2 time frames apart, and the market maker models form out beautifully. The PD arrays line up. It just works. So that's the reason for looking at price 2 time frames apart. You don't have to. You can look at price on every time frame if you want to. You can just look at 2 time frames. But I've learned that when you're studying the ICT concepts, you can see those market maker models form out very well when you look at it from 2 time frames apart. Like if you're on a daily time frame, you will see an expansion and a retracement. And then if you go down to an hourly time frame, you can see the development of the market maker model. You may be able to identify an initial consolidation. Maybe you might be able to see a accumulation or a distribution. You'll be able to identify where's the smart money reversal. Then if you go down to 5 minutes, you can definitely see the initial consolidation, the accumulation, the smart money reversal, the low risk sale, the first stage distribution. You can see it play out very well when you go 2 time frames apart. All right, carry on.
Now, you want to study price starting at the higher time frame, 1 candle at a time. All right, Tim, what is 1 candle gonna do for me? Because when you're on the higher time frames, like a monthly, that 1 candle encompasses probably 30 days. So there's a lot of information in just 1 candle. So you want to start out by studying price by just highlighting an entire range for just 1 monthly candle, from the high to the low. And then with TradingView, I just extend it over to the next candle, and that will give you, it'll highlight the range of everything inside that candle. Because on TradingView, when you mark something, it starts at the beginning of that candle. So if you go from this candle to that candle, that encompasses the beginning to the end of this 1 candle right here, that 1 red candle right there. If you can't see the bouncing ball, and you should be able to see it. Now, you want to highlight the entire range of a month, 1 monthly candle. Just pick any month, highlight the range. Then you want to mark out the high. Then you want to mark out the low. That creates your box. Right, the high of the monthly candle and the low of the month, that's your largest box that you're going to have. If you don't know about my box analogy, look at the last video. I talked about it in there. So you got your box. That's the biggest box that you have, the monthly box, right? Then you want to annotate any PD arrays that this candle touches on that time frame. So for example, this down close candle here, the red one that I highlighted, it touches this imbalance, this fair value gap right here. So since it touches that, I'm highlighting that fair value gap. And notice I stretched it over to the beginning of the next candle. Why? Because that's going to cover the entire range of this candle. It'll make sense as we drop down. So the blue shaded area is going to show me when I drop down in time frames, because I'm going back through data and I'm looking. This blue shaded area is going to say this is the price in that time frame that I want to focus on. The highlight is just to draw my attention to that area. And then this fair value gap, it interacted with that. So I want to see how price on the lower time frames interacted with this monthly fair value gap when I start to drop down. That's why you want to annotate any PD arrays that the candle comes in contact with on the same time frame.
All right, we're gonna pause right there. Now, you're not just at the reason I want to go deeper on why we're annotating any PD array that 1 candle that you're getting ready to study touches. Because when you're studying price, you want to study price in the sense of, this is what I saw when before this candle existed. When we had just expanded up here and made this high, this down close candle wasn't there. This up close candle wasn't there. This is the mindset you want to go into back testing and studying price action. So the reason why you're marking out this imbalance, you marking out any PD array that this month, in this case that you're studying, touches, because you're looking at it in the essence of, before this happened, this was my discount PD array in this case, because we were expanded up. This was my discount PD array that I anticipated price drawing back into, retracing back to. That's why you're marking every PD array that this candle touched on its way down. Okay. And in this case, it's only one. You're looking at, okay, we came back to this discount PD rate. This is what I was anticipating to happen before any of this took place. All right. And the reason why you're marking out the high and the low of this right here is because you're studying how price was reacting inside this range here, right? Inside the range of this candle. That's why you're looking at the highest high and the lowest low, because you want to see how high did it go and how low did it go during this range, right? That's why you're looking at that right there. Now, if you want to continue studying in the future, right, this high and this low, if you're going to study this month, then you will be looking at this high and this low as your dealing range that you're studying in to study this month right here. Okay, you're looking at it as your dealing range because you're looking at it in the sense of you anticipated this to be your dealing range and you were bullish because price had done this. And so you're looking at how price used the quadrants of this dealing range going forward. All right, that's just the kind of stuff you want to tell yourself as you're going back and studying price. You want to understand, why am I putting these marks on the chart? Carry on.
Now, and then you will repeat the above, all these steps here on the weekly and daily time frames. Now, when it comes to the box theory, I don't make boxes lower than the daily. I just make it because the higher time frame is what drives the narrative. Now, on the weekly, right? Now, this is where it starts to get sticky. On the weekly, right? You want to highlight, in this case, I'm highlighting the second week just for clarity. But when you're doing it, you're going to start with the first week. Now, every month is going to have 4 or 5 weeks in it. So in this month, this is the blue shaded area for that monthly candle. And so we got week 1, week 2, week 3, and week 4. Those are the 4 weeks inside of that month. When you come to the weekly time frame, you're going to start with week 1. But I highlighted week 2 because week 1, the high of week 1 was the same high as the month. And I didn't want to have any confusion. I want you to be able to visually see what I'm doing. So I highlight that week. It's the second week, right? I mark out the high and I mark out the low, right? That creates a box inside your monthly box. So this is the weekly box from that high to that's the box top, that's the box bottom, and this box is inside the monthly box. Anything above, external liquidity, anything below, external liquidity, anything inside, internal liquidity. So now you got a box inside of a box, right? Now you want to do this for each week, 1 week at a time. Right, and it's going to be 4 or 5 different boxes, typically 4 boxes inside it. But you're going to do week 1, right? And when you do week 1, you're going to drill down to the daily, and you're going to do all 5 days separately as you're studying price. So in this case, we're on week 2. So here we are. We've made it to week 2. Okay, we annotate in week 2 because in week 1 we've already highlighted week 1 and studied price on Monday down to the lowest time frame, studied price on Tuesday down to the lowest time frame, Wednesday, Thursday, and Friday. And once we did all that, now we've moved on to week 2. And now we've highlighted week 2 and annotated the high and the low. And if there was any PD arrays that we wanted to annotate right now, I'm not annotating anything because there's no imbalances that this candle is coming down into, right? This over here, we would have annotated this small BISI right there, but that's already passed. So this one here, we don't have anything that we really want to annotate. If you wanted to, you can annotate the order block here, but I try to focus on imbalances and liquidity. That's my thing. But any PD arrays that it come in contact with that is a part of your trading strategy, you want to highlight it to see how it interacts with it. Now,
pause right there. Okay. Any PD array. So if you're studying price, right, for week 2, this wick right here, you can put quadrants on that wick and you can study price to see how price during this week interacted with that wick right there. Because like I said, when you move on to week 2, this high and this low is going to be your dealing range that week 2 is moving in. Okay, when you move on to week 3, this high and this low is going to be the dealing range that week 3 is interacting with. We're reaching outside of that dealing range right there on the weekly time frame, right? And over the monthly time frame, right, we're actually inside a dealing range over here somewhere, but we're just going in and studying the price within the scope of we anticipated price to draw down to this on the higher time frame. So we're studying how did it use all these PD arrays, this wick, that order block as it was drawing down into the PD array we anticipated price to come down to. Okay.
You got that? Beat that horse enough. This is a daily time frame. In this case, I've highlighted Monday, the first day. So we have Monday, Tuesday, Wednesday, Thursday, and Friday. These are the 5 days within that weekly box, right? There's the weekly box top, the weekly box bottom, and then I've highlighted Monday. That's the top of Monday and the bottom of Monday. So for every month, you would go and highlight week 1 and do study Monday, Tuesday, Wednesday, Thursday, and Friday, all on the intraday time frames, and then move to week 2 and study Monday, Tuesday, Wednesday, Thursday, and Friday, all on the intraday time frames, and then move to week 3 and study Monday, Tuesday, Wednesday, Thursday, Friday, all on the intraday time frames. Then move to week 4 and study Monday, Tuesday, Wednesday, Thursday, Friday, and then your month will be done. And that's how you go through with the boxes. And each time on the daily, you're just creating a new daily box, but your monthly is not changing. And once you finish your week, then your week will change, but your month will not change. And when you finish week 2, then your week will change again, but your month will not change. Then when you finish with week 3, then your week will change again, but your month will not change for the box theory. Now, time and price. Now, on the intraday time frames, this is where the magic happens. Yes, it is. On the intraday time frames is when you're really going to start to study the price action. And while you're studying the price actions, these are some of the questions you want to ask yourself. This is not everything in totality, but these are some of the questions that will help guide you in the way of studying ICT concepts. And don't worry, we're going to jump over to the charts and discuss some of it after I give you your homework. Now, what's some of the questions you want to ask yourself? What time are PD arrays formed? Meaning, we're on the intraday charts. So what time of day was this 4-hour SIBI formed? That's something you want to annotate. What time of day was this 4-hour SIBI formed? What time are the PD arrays revisited? What time did it come back into this 4-hour PD array? Time and price. Time is very important. Time is more important than the price, right? What time did price consolidate? What time of day was it when we just did this consolidation over here? Or did it consolidate all day, right? It's important because a day is a part of a week. So if it consolidated all day, okay, it consolidated all this time, and then we went up and we went, yeah, it's a part of the week, time and price. So on Monday and Tuesday, it did this. Wednesday, it did that. Thursday, it did that. Friday, it did time and price. What time of day did it do it? You get it. What time did it displace? Hey, this is displacement. What time of day was that when it displaced? What time did price manipulate the lower high? It wicked this out and then it dropped, or it wicked that out and then it dropped. What time did it do that Judas swing? When was that? When did it manipulate the higher low and then reverse the other way? Right? What PD array did price trade back to? But when it traded down, what did it trade back to over here? Right? What time did it okay, it traded here, we traded back up at, let's just say we traded up in the New York AM. We traded back up into a SIBI that we created in the New York AM, or a SIBI that we created in the New York PM, or we traded back up in the New York AM. This BISI was created in the AM. You look as far left as needed to get the correct confluence. We cut through candles. So if you're looking for the confluence and you know it is, we're displacing or we're manipulating in the New York PM, and then you look to the left and you see a SIBI that was created in the New York PM, then you know price is reacting to that SIBI over there. Or it could be the New York AM. But if price is bearish, and this is the first time we're trading back up into this SIBI, and then we come back, I'll give an example of that later. Now, time and price. Let's get to the homework, and then we'll get into our examples. Homework. I want you to go back, just pick a prior homework assignment and redo the assignment using the techniques that I just went through with the box theory, and see if it helps and see if you want to implement it in your studies, and use the ES June contract on trade. Still got everything on the screen. This is our monthly box. This is the box that we drew out, right? So our monthly box is the blue. Our weekly box is the tannish color, and our daily box is the yellow color, right? So looking at this day here, the hourly.
Let's do this. Let's do this. Let's open up Trading View. Hey, okay. Let's open up Trading View. Let's hide everything here. Okay. Still sharing. Yes, I'm still sharing my screen. All right. So, for example, right, let's go to the continuous contract. Yeah. All right, we're gonna go to the continuous contract, and we're gonna go to the monthly. All right, we're gonna go to the monthly chart. All right, and so I'm gonna come in here, and for example, if you're studying price here, right, you can get as in depth as you want. Okay, so now we see here, right, this right here is the current dealing range that we're in right now on the monthly time frame, because we all know that the overall time frame is bullish right now for the NQ. Overall, we may be pulling back, we may be in a pullback, a retracement, correction, whatever you want to call it, but overall we're bullish. Okay, and then we're looking back, studying, and we say, okay, we price expanded, pulled back, right, created relative equal highs, took out the highs, right, traded back down into the order block, then displaced away, right? So we see this displacement, and now we're looking at this here, right? We're looking at all of this here as a balanced price range. Okay, on our higher time frame, we're looking at this as a balanced price range. So anytime we're looking at a balanced price range, right, what do we, if we're bullish, we don't want to see price digging back down into this. And since we don't want to see price digging back down into that, then we know that we can look at price in the sense of leaving that balanced price range, right, as our area to focus on. Okay, so we zoom out, and now we're focusing on just this area here, right, from here, right, down to there. Okay, the area that leaves the balanced price range. All right, This candle here is the candle when we're leaving that area. All right. And we're studying this area here. We see we created an imbalance as we were leaving that area right there. Right. So we got our evidence of displacement, this V shape down there. We're looking at that as trap traders. Right. And so we got displacement away, looking at that as a balanced price range. This is our latest dealing range that we're studying there. Okay. And we can see here inside this dealing range, right, price retrace back down, right, to fair value, slight discount, but we just say fair value, right? We trade it down there, then reject it back up, so we can see that price is still respecting bullish order flow. But we can see here that we've been in a large area of consolidation, aka engineering liquidity, right? Because this is the October candle when we made the high, right? When we made the all-time high, this October candle. So we've been there for 1, 2, 3, now 4 months, right? This is the 4th month that we have been inside this range right here, right? Inside that range right there. We've been inside the premium of our latest expansion leg, just sitting here engineering liquidity. Okay, this is all the stuff that you want to study and pay attention to while you're looking back through price, because you want to understand why is price doing what it's doing, right? So now once you get a good understanding of what price is doing what it's doing, now you want to go in and you want to pick, okay, this is what I'm about to study. Okay, so if you come back and say, I want to, this is the month right here, right? I'm studying, right? This month right here, right? If this is the month you're studying, right? While you're studying this price section right here, okay? While you're studying this price section right here, you want to make sure that the box top month, I haven't used this in a while. I done took the box tops. Oh no, I didn't. Right. That high. Right. Box top low. Box bottom low, I'm sorry. Box bottom month. That right there. If you're studying this price right here, this is the high and this is the low of your box. Why? Because you're looking at it in the sense of this is how you're coming into price, right? You're coming into price like this and you're predicting what's about to happen in that month. Okay? You're predicting what's about to happen in that month. Let's get this. Man, it would have just been faster to. Would have been faster just to start over. Okay, so now you want to annotate whatever you want to annotate that it came in contact with. All right, so looking at that there, we have a suspension block here. All right, so you can do it several ways. You can grade the suspension block, right? You can grade the suspension block if you want to, right? To look at detail of the levels, I advise grading it. But if you got multiple PD arrays that you want to study, right? Maybe grade them separately, right? Meaning, okay, if you have, we're going to go with our bullish monthly. All right. So then then you can come here and grade the wick, right? Grade them separate. Excuse me. All right, then you can go in and grade the wick, right? But I always advise grading the PD array so that you can study what it did. Also, right, this is our dealing range that we're in. So we want to focus on our bus stops inside that dealing range. Okay. In this case, we didn't engage with the high and the low, so I'm just going to turn off the high and low, right, and just show the quadrants of the actual dealing range, right, because that's important too. So now we go down to our weekly time frame, right? We go down to our weekly time frame. Let me see. Okay. Okay, so this is the week that we're studying price inside, right? I mean, this is the month here, week 1, week 2, week 3, week 4, right? See, it's inside there. So as we come into week 1 to study week 1, right? We're starting out studying week 1 by looking at the high and the low of the last week from the prior month. All right. Box bottom week. There. Boom. And then the high is up there in the same place as the monthly high. Box top week. Right. The high is the same as the monthly high. All right. And then, so we're starting out studying these candles here. This is what we're studying. This is the price we're studying here. Okay. Now, you say, Tim, why are we doing it like that if we're studying this week? Because we're doing it in the sense of these candles don't exist yet. All right. So when we go to the daily time frame, right now, once we go to our daily time frame here, this is the first day, right? This is the first day, and these are all the days in that month. Okay, so now, right, we start out here. This is our monthly low. This is our monthly high, because we're studying inside the range of that previous month, right? That's our box. Coming into this month, the previous month is our monthly time frame. That's our dealing range, because the algorithm gives us prefabricated dealing ranges based off time. So once a time interval closes, you now have a algorithmic dealing range to work with. So when this month closes, now you got a algorithmic dealing range to trade inside of. That's why I use the box for every day. I start with the prior days, high and low, because I got a dealing range that I can deal with inside for intraday time, but that intraday dealing range is inside a larger dealing range. Just like this month here, right? This monthly range that because this month comes from this day back over to whatever day over here somewhere, right? That's what that is. But this dealing range of this month right here is not for these candles. It's for what's happening in the future at our bus stops, right? At our bus stops. So we're well, in this case, this is our higher time frame bus stops. But if we grade that range from high to low, right now we're looking at what happens at the bus stops inside our monthly range, right? Inside our monthly range. That's why you want to grade everything, right? You want to grade everything. And now it's getting kind of messy here, so I'm going to hide the higher time frame dealing range. All right, I'm going to hide that wick that we was watching. That was the monthly wick. I'm gonna hide that for now, and then now we're just gonna focus on, right, this is our dealing range. This is our monthly range that the algorithm is so generous to give us, right? We got the lowest low and the highest high of the previous month. And like I said, we're not creating it so that we can just say, hey, look what price did as it was going up. No, we're creating it so that, if you know, like what I'm going to do, I'm going to move it all the way to the end of the range. So put both of them on 279 here, right? And when I do that, right, this is the day that we made that highest high, right? Remember, this was the lowest low of the month. This is the day we made the highest high of the month, and then the month closed there, right? So now we're looking at our bus stops, right? These quadrants, we're looking at these in the sense of, after we made this highest high and start to come back down, we're looking to see what happens in the future at these bus stops. Okay. And then as we're going through studying price, now we're going through each day, right? We start out with this week, and then we're got the highest high and lowest low of the last week from that month. Then we study Monday, Tuesday, Wednesday, Thursday, and Friday, right? And once we study everything that happened during that first week, right there, right? Once we study all of this, right, everything that happened, you know, as you drill down into price, you go down as low as you want to go. That's a daily. We go down into a 60-minute time frame, right? And then you notice, right, when we go back, let's go back to the daily chart for a minute, right? And when we look at this daily chart, you notice we have an expansion and a retracement, right? And then when I go down to 60 minutes, right, go down 2 time frames, daily, 4 hour, 1 hour, I go down to 60 minutes, right? When I go down to 60 minutes and squeeze up the chart, see how we can see this market maker model starting to form out, right? Got a niche consolidation, right? We got some stages of accumulation. We got a smart money reversal, right? We got a low risk short, right? Tested it a little bit, but we still didn't take out that high. A lot of high resistance there. And then we come over here to another stage of accumulation, right? Second stage of distribution, second stage of distribution, trade back down below the initial consolidation, right? You can see the market maker model play out well. And then if we go down 2 more time frames, 15 minutes to a 5, right? Go to a 5-minute time frame, then squeeze up the chart. And now we can see, right? It's hard to get everything in there, but we get more detail on the market maker model, right? Get a whole lot more detail on the market maker model. Okay. And then once you go back through and you annotate everything that you want to annotate, now this week here, when you get ready to move into study in the next week, now this is your lowest low of the week, right? This is your highest high of the week. The monthly is not going to move, right? The monthly is not going to move. Now, this is your weekly range that you're trading inside of here, right? And then this is when we made the lowest low before the week closed. So both of them are over there at the 9s, because now you're studying price on the daily time frames to see what happens at the bus stops, if it gives you anything, right? You go through and you annotate all of the PD arrays also. But the thing that you want to do when you're studying price, you want to make sure that when you're annotating a chart, you want to annotate it using the benefit of hindsight, right? Meaning you're looking at Monday, Tuesday, Wednesday, Thursday, and Friday, right? You're looking at this range of price You're looking at this range of price right here, but you want to make sure to use the benefit of hindsight so that you can go in and annotate any PD arrays that you want to annotate so that you can say, all right, I anticipated a retracement because after sweeping this liquidity, we got a nice rejection. So I anticipated a retracement back up, right? We retrace back up, and you can annotate the, is there a space there? 75 to 50, well, no, it's not, right? You can annotate the BISI here because it came down, right? Close below it, right? Is back up in the premium here of the move, moving back up into the premium. You say, I'm anticipating this, watching this BISI here, right? As we trade it back up, and then you can monitor. You're using the benefit of hindsight to see what PD arrays you want to annotate to go and study price on the lower time frame. What PD arrays that price came into contact with, and then again, you know, you have a wick here, you got that there, and then as you drop down into the lower time frame, okay, as you drop down into the lower time frame, then you can monitor how you use these ranges on the intraday time frame. All right, so we got the BISI, we got the wick, and then don't forget we got our overall dealing range in there, right? The overall dealing range is getting kind of messy, but and then we go down to just say a 60-minute time frame, and we move over to our area. This is our blue shaded area there for the range that we're studying. All right, that's our overall range, right? So that's the highest high and lowest low, right? So that overall range, these are the bus stops for the overall range, okay? And then, right, you see these are the bus stops for that BISI, okay? You want to study how we use, these are the overall bus stops for the BISI, and then you see here we have a SIBI, right, at 9 a.m. ink influence inside that BISI, right? You can study that SIBI, right? What time we traded back up into it during the 9 a.m. time frame, right? A 9 a.m. SIBI, we traded back up into it during, so New York morning, back up into it at New York morning, right? Looking at what time we did things. This is on Monday, right? Trading into it on New York morning. Then over here on Tuesday, right, we're still inside it on New York morning, right? Come over here on Wednesday, right, we're still inside it on New York morning, right? Looking at how, just going through studying price, but you always want to understand this is the range that we're working inside, right? For those who don't really understand the box theory, the box is just your dealing range, right? The highest high and lowest low where price is inside right now. It can be an actual dealing range where you had a liquidity sweep, or it can be a pre-made dealing range based off of algorithmic dispensation of time. All right. I think that's all I got, man. Do we have anything from the peanut gallery? Any questions from the peanut gallery?
I do have a question.
Okay.
So, not for you. The box theory. Could you, like, say for instance, okay, like you were saying, we had the weekly, and so we see how that last weekly candle closed, and we have a bias. Let's say for instance, we have a bias that the next week is going to be bearish. Okay. We have a bias. So from that bias, could you then use it like or even we say we're gonna be bearish, so we go to the daily and we start boxing it in based on how a daily candle is made. We use each day's candle, kind of like what you're saying, to box in. And if we think we're gonna be bearish based on how a candle, we go up. And once we start displacement down, can you kind of use that daily range for that box and then anticipate? Does that make sense? Anticipating that next day to be bearish
No,
also.
walk me through it on with. Let me share my chart. Hold on. Let me share my screen with you. God dog it. Come here. Where's Zoom go? Okay. You see my chart?
It hasn't come up yet. It's coming, I think.
Where we at? You looking on YouTube or Zoom? What you looking at?
I'm on Zoom.
You on Zoom? Hold up. Let me see here. Oh, I'm showing the wrong thing. Yeah, I'm sharing my screen on Zoom. You can't see my screen?
Ain't no
I can
candles on
see
there.
it's no candles on here.
Oh yeah. I just said, can you see my screen?
Oh, yes. Yes.
Okay.
I see your
All right.
screen.
All right. Yeah, all like, can you see my screen? And you're like, it's coming. It's coming. I'm like, wait a minute. Okay, so now walk me through what you're saying. All right. So a day. All
Okay,
right.
so let's go back up to that very highest bearish candle up there on the right.
Here.
Yes. Okay,
Okay.
so based on how that day closed, we
This
closed
day right
below.
here.
Yes. And I know some people have been
All
teaching
right.
that you can kind of have your bias based on how the candle closed. So we didn't sweep the high, we closed below that low. So my bias would be the next day to be bearish. We still would box that candle in and see that we could use that
Okay. So you talk about we start and this day is getting ready to start. Right.
the
So when we
third
get
day.
ready,
Yeah.
we are here in price like that.
Yes.
Yes. So yes. So your box. Yeah. This is your dealing range. This is your top. This is your bottom. This is your predefined dealing range that the algorithm has given you. Right. This is what
Correct.
you're working inside of. Now, since you're saying like, okay, in this case you're saying we came down, right, and we closed outside of this low. So going into this day, I'm bearish.
Right. Going into
That
the third day,
Yeah,
my
going
bias is
into
that.
this day,
Yeah.
I'm bearish. Yeah, and
Right.
there's nothing wrong with that, right? Because you have to have some type of idea of what you're going to do going into the day. So you want to go into it with some type of idea, and then you're looking for the signatures to help validate or invalidate your bias. So
Okay.
you're still marking it out like that because this is your dealing range based off of this algorithmic dispensation of time. And you still want to remember that you're inside of this range right here. This is your overall dealing range, and this is your shorter term dealing range for your intraday decisions you're going to be making.
Okay. Okay.
And
That
then
makes sense.
and what else? And you said something else about it. Or did you cover everything just now?
It was just like you saying. So if my bias was for that next day to be bearish and I have that marked out, I guess I would have to drop down to a lower time frame. I don't want to see it go probably higher
Okay.
than maybe
So
50% of that candle.
all right. So this is your range that you marked out. And if when you're studying the price, okay, let's knock the rest of these days off. Like I said, you're doing it with the benefit of hindsight, right? So when you're studying the price, right, we're just saying we're going back and studying the price now. So you're saying you're going to come in and be like, okay, because how January 29th close, we took liquidity, right? We left the buy side, right? Well, after sweeping buy side, we left the buy side and started to engage daily sell sides, and then we closed outside the low of the 28th, going into the 30th. I had a bearish bias, right? This is what you tell yourself in your mind.
Right.
Mark out your high and your low, right? And so now I have my high and low marked out there. And so now I have a bearish bias. So now this is my daily range here. So now I'm looking for an opportunity to for a short setup to present itself in the premium of my daily dealing range, right? Preferably above my opening price, right? This is what you're telling yourself as you go in, right? If you have an opportunity, preferably above my opening price. All right, so I'm gonna mark out our open price there and just put it there like that, because that's what we prefer to get a short above. Okay, then we got our range, right? So let's make this thicker, right? Make that thicker, and then we're going to make a thinner one on the wick, right? This is going to get messy, so I'm going to just make those straight lines, and I'm gonna make those all black. All right, so now we're just gonna drop straight down to a 15-minute time frame, right? Because now all we want to do is mark out our levels. Okay, now, oh, we forgot to, oh yeah, this is the start of the day right here. This is 6 o'clock right there. That's the start of our day. That's why I put that there so I can see it. All right, so now for studying purposes, right? Now you're coming in and you say, okay, price immediately, right, respected that high, right, and broke down, right, giving me a bearish shift, right, immediately broke down, giving me a bearish shift, right. And once we came over here to the New York morning session, it traded back up into a slight premium, giving us an opportunity to sell in the premium and get above the opening price on the daily candle. But let's see, we did get above the midnight open, right? We did get an opportunity for a short setup above the midnight open. So we got midnight, come over here to our 9:30 open, right? That's our 9:30 open there. All right, we got our, we look at our pre-market, buy side liquidity pre-market, 9:30 open. That'll be our pre-market high, right? I'm gonna get rid of some of this other stuff. That's our premium. We need that. We don't need the wick right now. I hide the wick. That's not important for what we're doing. All right. Then we got our pre-market low. 8:30 a.m. Right. So that's our pre-market high, pre-market low. Make these a little bit fatter so we'll know. No matter of fact, I'm gonna make this fatter so we'll know that's the range, and then I'm gonna make this a 2 so we'll know the difference between, yeah. All right, so we got our 9:30 open here, 9:30 open. All right, midnight open. Midnight open. All right, And then now we're gonna go down to what you enter. 5 minute, 1 minute. What you enter on? 5 minute or 1 minute? What you enter on?
5.
5 minute. Okay. So now we come in here and we got our 9:30 open, right? This is our opening range. You know, we'll check out our opening range for anybody who may not be like, oh, I don't do anything before the opening range solidifies itself, right? Everything that somebody can possibly trade, right? That now the opening range gap, this is our opening range, right? So from 9:30 to 10. All right. So as we can see here on this day here, we got a lot of back and forth, right? A lot of back and forth, a lot of manipulation. But now we're stuck. Remember, we came into it bearish, right? We're looking for opportunities to sell and a premium, preferably above the opening price, right? So 9:30, we open up here. We trade up above midnight, right? We're inside our opening range. If you don't trade within the opening range, you're not trying to mess with anything in here anyway. We trade up into our pre-market buy side, right? That's a good sign for us because we're bearish, right? So at 9:30, we open up and we immediately attack our pre-market high and moved into a slight premium on the overall dealing range, right? Once we attack the pre-market high, I drop down into my 5 minute time frame. So that's 5, 10, right? So during this 15-minute candle there, I dropped into my 5 minute time frame and started watching to see if price gave me anything that I can trust selling short off of. All right. So then we're watching our 5 minute time frame and price is coming here. We're not it's just a bunch of back and forth, back and forth, back and forth. Okay, price is not showing a willingness to leave this area. All right, it's not showing a willingness to leave this area. We come into our macro time, still not showing a willingness to leave this area. We're trading back up, right? Price is in high resistance. So now you're just watching for signatures that it's okay to take your short in the premium, preferably above the opening price. All right, so we come up, we take out the pre-market high, right? Trade consolidating, we come down, start to displace lower here, right? So now here we drop down, set relative equal lows right here. Now at this time here, right, you will be looking for a short opportunity here. And as we see here, this right here would not have played out, right? You'll be looking for a short opportunity here because once we came down, we broke structure, right? Have a gap there, look for a short opportunity here. Your mandatory stop would be up there. If you know what I'm saying, have enough risk to take this trade, your mandatory stop would be up there, and this trade would not have played out, right? That trade, if you had enough risk to take that trade would not have played out. If you didn't have enough risk to take this trade here, right, then you see price come all the way back up here. And since it's coming all the way back up, now what do we anticipate? Oh, we're still inside high resistance. So now you're monitoring how price trades at this order block, because we're still in high, even though we started to displace, we're still in high resistance because we traded immediately through this fair value gap. So now we're monitoring how does price act at the order block here, right? And keep in mind, we also have the main order block over here, right? This is our main, because we came up there, so we made our high, right? So we're monitoring the order blocks here. How does price trade there? Okay, then price trades up, right? Fails to take out the high, and then we start to displace away again, right? Now that we're displacing away again, we see price comes down, trades back up into this civvy here, right? gives another breaking structure there, right? So now if you did not take this trade here, we didn't get all the way to the SIBI. There's no there, right? So there's no there, it didn't make it to that SIBI there. All right, so no trade there based off the SIBI there, right? We come down, right, get a close there, coming back up. This is a very wicked day. This trade here, right, mandatory stop, you would have been stopped out. Safe stop, you would have been good, right? And then price went down and delivered to the sell side, and then continued down based off the bearish narrative. Now, this right here, this will be a day you can annotate and take notes on. You can do everything right. If you got enough risk to reward here, you would have been stopped out. If you had enough risk to reward for the mandatory stop, you would have been stopped out. If you had enough risk to reward for the safe stop, you would have been good, right? But you can annotate, take notes on a price came all the way back to the midnight open here on this 1140 candle. You know what I'm saying? This is a very high resistance day. You'll probably want to go back and look to see what type of day was this. This is January the 30th. Was it the week of FOMC? Was it the week of CPI? Was it some type of news this week to try to figure out what created all of this? Oh, it's a Friday, right? So this is a Friday. So it's Don't Force It Friday, right? Then you can go back and look at the week, right? This is Friday. Then we go back. Go back and look at, all right, this is Wednesday, Friday the 30th, right? And we go back through and look at the week, and we say, okay, we did a lot during the week, so Friday we're not anticipating, right, very clean price action, because we've done a lot during the week, and then going into Thursday and Friday, it's been a lot of high resistance, different things you can take notes on, but you always want to take your notes and study price in the sense of this what my bias was, and you want to be realistic about the trades that you would have been taking, right? The trades that you would have been taking. Don't just say, oh, I see this perfect trade over here. You want to be realistic about, okay, I would have taken this trade because this is my setup. It wouldn't have worked out, right? I would have taken this trade because this is my setup. That wouldn't have worked out. That would have worked out. You don't want to just go in with rose-colored glasses and pretend like, oh, I wouldn't have taken this trade when you actually really would have, right? I know.
Okay, that's good stuff. Okay.
I know you.
And then especially going back and knowing it was a Friday and looking at what the rest of the week was doing. That's appreciate it.
Mm-hmm. We always want to study price the same way we trade price. You know what I'm saying? Anybody else got anything? Anybody else got anything before we get out of here? Again, man, I jollipies technical difficulties, man. Technical difficulties. Do me a favor. Hit a like for the algorithm. If you're not subscribed to the channel, please subscribe and turn on all notifications. If you want to be a part of the Discord, thanks to the second link in the description below. $50 a month, not bad. Tomorrow we are going to be, it's going to be breakers. Breaker 19, breaker 19. We're doing breakers tomorrow. 8 o'clock, man. I'm pushing to be here at 8. I hate being late. Sometimes stuff happen outside of my control, but I'm pushing here to be at 8. I appreciate y'all for tapping in to another episode of Facilitation February. Hopefully y'all getting something out of this. Hopefully it's helping the gang to grow in their development. Do me a favor and share this out with somebody who you think will gain something from it. Tell them to pull up every night on the month of February at 8 p.m. Next week, starting next week, on the 23rd, we're going to be doing live tape reading. On Monday, Wednesday, and Friday, we're going to be doing live tape reading from 9 a.m. to 10 a.m. Right here, same bat times. No, in the morning, same channel, same bat channel, not same bat time, right? And then on Tuesday and Thursday, the 24th and the 26th, we're going to do the tape reading at night from 7 p.m. to 8 p.m., right? For those who can't sit down at the chart at 9 o'clock in the morning, right? We're going to sit down and study the price at night. Full transparency, it's not a call out service. I'm not going to be looking for trades. I'm not going to be calling trades. We're just studying price. We're studying what the candles are doing in real time. The Asian session is typically a lot slower than the New York session. So it may be like watching paint dry. It may move very nicely. We don't know what we're going to get during the Asian session. We don't know what we're going to get during the New York session. Only thing we know is the New York session is typically more volatile than the Asian session, meaning we have larger swings and larger moves when it's moving. The market has been extremely volatile recently, so be safe out in these trading streets, man. Till the next time I decide to get on Al Gore's internet and share my thoughts on this thing that we call price action, it's your boy, Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That just means big spot if you don't hablo Espanol. I'm really trying to find my, oh, there it is over there. That's just big spot if you don't hablo Espanol, man. Y'all be safe out in these trading streets, man. Gone.